Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video today. And just as usual, while I have you guys here, please don't forget to maybe pause this video and like the video, subscribe to my channel. It'd be really awesome to have much more of you subscribed and also to like the video. It would be much appreciated. So in today's video, I will be talking about the main things that happened in both the stock market last week and also the crypto markets, and giving you an update on the portfolio and the performance, as well as I may touch upon a few strategy areas. Just to let you know that this is going to be my last video for a couple of weeks. I'm going on holiday next week to Europe. It won't affect our portfolio in any way. I'm still going to be managing our portfolio very regularly, as well as I will try to provide a more written update. It's just I won't be able to make a video for a few weeks. So a little bit of an update on our portfolio. It was quite a strange week, to be honest with you, last week. My portfolio was up about 2.1% for the week. However, both the NASDAQ and the S&P were down last week. So the NASDAQ was down about 1.6% and the S&P was down about 0.9%. Also had the 𝗁𝗶𝗀𝗀𝗀 100, which was down about 0.52%. So and China was also down last week. So all of the major indices were down last week. However, our portfolio was positive, and that was mainly because we had a bounce or a rally in crypto, and especially in Ethereum, which has bounced off quite heavily off the lows that we saw just over a month ago. So we are seeing some good bounce backs there, which was very good for our portfolio and lifted us into the positive overall for the week. I also did quite a lot of short-term trades last week as well. I traded oil. Oil was quite heavily down last week, but it reached some really kind of low periods, and I managed to buy into some positions and then sell at a short-term profit. I also did the same with cotton as well on that recent slump, and I closed those trades profitably. I also closed out a long-term position which we have, which is Copiers, which was a catering company on the UK stock exchange. I decided to close that because it had achieved a very good gain. It had achieved a very good recovery from that kind of COVID period where it suffered considerably, and it was very close again to those yearly highs. And I decided to close that position and build up a bit more of a cash reserve so I can do some more trades and also average down on some other core positions as well. So if we look at our portfolio from a 2022 benchmarks perspective, we are still quite a little bit below the benchmarks. The NASDAQ is down about 26.8% for the year, and the S&P is down about 18.9%. And our portfolio is down about 34%. But if we look at Bitcoin and crypto in particular, obviously it's been an extremely difficult year for Bitcoin and crypto, and we have a decent amount of crypto within our portfolio. So this year has been a struggle, but don't forget that although we are trailing behind those benchmarks, obviously we have a blend of different asset classes within our portfolio, and I think that we have a lot more upside than those indices as well. So and that's why over the last kind of 5 to 6 years I've managed to get a very strong gain altogether in my eToro portfolio, and we must go through some periods of this volatility in order to be able to come out the other side and get strong gains. So thank you very much for your patience with the portfolio, and I think over the next couple of months we should see some improvements. So if I look at the main news for last week was really dominated by sentiment to do with the CPI inflation figures. which were released on Wednesday last week. And what we saw is a figure of 9.1% inflation on a year-on-year basis. And that was compared with what was expected. The estimates were about 8.8%. So it was considerably higher than the estimates. And I think it's the highest it was since 1980. However, shortly after those figures were released, there was President Biden did speak, and what he said is that those figures were, a lagging figure, and they were, trailing in the past, and that we have seen commodity prices come down significantly, especially oil and gas, and those figures are not yet showing in the CPI figures, and they will show in future CPI figures. So there was still a lot of positive sentiment that inflation could be starting to abate despite those really high figures that came out. And just to back that point up, the 5-year inflation expectations have continued to lower month on month. And now those 5-year inflation expectations are down to about 2.8% over a 5-year period. So people are expecting that inflation is going to peak and is going to start to come down slightly, and mainly because of these increased interest rates and some of the demand destruction that has been caused by that. However, the expectations are still that there will be a 75 basis point interest rate hike at the next Federal Reserve meeting. Straight after those CPI figures were released, many people were saying, look, they could do a 100 basis point and 1% interest rate rise. However, the futures market is not pricing that in, and it is expected that they will continue with the 75 basis point hike for the next meeting, which I believe is mostly priced in. We also saw oil prices. They continue to slump, and there was a very important meeting between President Biden and Saudi Arabia, and there's ongoing discussions about potentially increasing production, and also those oil prices have gone down as recession expectations increase, which obviously is going to affect the demand of oil if we were to run into a recession or a more deeper recession. We also saw the euro and the US dollar hit parity. And I guess it's really a question. I mean, that's the first time that that's happened for a long, long time. And I guess the question is the euro weaker or is the dollar stronger? And I think the euro is generally quite weak at the moment. But if we do compare the US dollar with many of the currencies like yen and some other currencies, you'll see that the dollar is continually getting stronger. And I think that this is mainly to do with some of these tightening measures that are in place. We also have seen the Nord Stream project in Germany, which has been closed until Friday for maintenance. However, there is a lot of concern that they may delay, the Russians may delay the opening again of the Nord Stream project in retaliation for some of those sanctions that have taken place in Europe. And it's to be seen whether that will be opened up again on time, which is obviously having an effect on the gas prices. We've also seen figures which show an economic slowdown in China, and there is increasing worries about potential mortgage defaults. If we looked at some of the charts that I've seen, we're starting to see more mortgage defaults in China as that kind of recession starts to take a grip. Obviously, there has been a lot of worry and concern about the housing market in China. It had been in a bubble previously, and we have seen a lot of slowdowns over the last few months and a lot of economic problems and liquidation problems of housing development companies. So yeah, we're starting to see more of those mortgage defaults in China. As we move on to the top 3 performing stocks of last week, I'll go over these very briefly. The top performing stock of last week was Micron Technologies, and that was up about 4.04%. The second best performing stock last week was Taylor Wimpey, and that was up about 3.76%. And the third best performing stock last week was Plus 100. And this has had a very good year, actually, if we compare that to the rest of the stocks in the UK stock market, but also globally. It has had a good rise this year, and that is sitting at about 2.45% overall for the week. However, there was not any spectacular gains for individual stocks within our portfolio last week. As I said, the main indices were quite muted. However, we did get the majority of our gains last week from crypto and especially Ethereum, which had a very positive week. And I'm going to continue our Death by Charts series, and I'm going to bring to your attention 4 different charts. So the chart to the top left-hand corner is the June 2022 CPI report. And I just wanted to outline to you a few different parts of the economy which we have seen year-on-year changes in CPI. So obviously the biggest effect on the CPI figures is fuel and oil. We've seen increases by 98.5% year-on-year in terms of the oil price. Gas and utilities are also up 38.4%. And then we look at other things like food inflation, which is going to affect the pockets of most families. And that food is up about 12.2%. So you're seeing a lot of inflation, not only in energy, but also in core things such as food. We've also seen new cars prices increase. Obviously, there was a semiconductor chip shortage, and new cars is up about 11.4% in terms of inflation. And then other things such as apparel, used cars is up 7.1%, but that has come down slightly over the last few months. So we're really seeing inflation take grip in many different areas. However, some of those key areas of inflation growth have started to slow down, which does give me a lot of positivity and optimism that inflation could be starting to peak. If we look at the bottom left-hand corner chart, this shows that US retail sales have continued to increase by 7.7%. And that sounds really good, because you might think, oh, well, we're not really in a recession if kind of US retail sales are continuing to grow. And however, I just wanted to state that if we look at that on a inflation adjusted level, because inflation levels have gone up considerably, they are actually down 1.2% on an inflation adjusted level, because obviously the prices of goods have increased, which make the dollar value higher in terms of retail sales. But the purchasing power has decreased quite significantly. So if we look at the top right-hand chart here as well, we can also see that the mortgage rates have increased quite significantly. And the mortgage rates have increased by about 5.51%. So the cost that people are paying for their homes on a month-by-month basis has increased significantly, and now the average is about 2,387. And if we look at that in kind of 2021, we were sitting at around 1,500, 1,600 area, and on the median kind of mortgage rate. And that is obviously because those interest rates have been hiked. So it's making those mortgage payments considerably higher. And it'll be interesting again to see over the next 6 months whether we see more kind of mortgage defaults as the cost of our rising of mortgages. Okay, and the bottom right-hand corner chart I just wanted to outline is what I was mentioning earlier to do with the currency strength of the US dollar. As you will see, if we compare the euro to the US dollar has got considerably stronger over the last year or so. But the same thing has also happened with the US dollar over the yen as well. So generally, the US dollar is becoming a lot stronger, mainly due to those monetary policies and those fiscal tightening that's happening at the moment. Just some short crypto news and updates this week. It wasn't too much that was happening in the market, but we did see some good crypto market rises. Since the low, we have seen Ethereum has risen from 897 at kind of at the low of this bear market. Was that about a month ago or so? And that has risen to over 1,400 as of today. I think it's even a little bit higher than that right now. So we have seen some good rises off those bottoms. Ethereum has outperformed Bitcoin over the last couple of weeks, and I think the main reason to do with that is to do with the merge dates for Ethereum 2.0 being released, and there is a lot of gaining optimism around Ethereum for this year, and it's also become a much clearer and easier institutional investor product as well. If we look at the Bitcoin, Bitcoin has risen close to the 22,000 level. It's quite a key area because we've kind of been sitting in that range between the lows of about 18,000 to about 21, 22,000. So if we can break out significantly from there, we might have a nice bounce moving forward. But a lot of the Bitcoin on-chain metrics are pointing towards the fact that we could have already seen a bottom in terms of the Bitcoin price, but it's important to continue to look at that data. We've also seen the USDC, so Circle runs USDC, which is a US dollar stable coin. And they are stating that all their stable coins are backed by physical reserves, which is obviously very good because a lot of people have USDC on the sidelines. And obviously with what happened with UST, although that's very different because it's an algorithmic stable coin, many people want to know that those reserves are backed up by something. We're also seeing Paraguay move much closer to approving their crypto bill. So last year they first filed the crypto bill. However, it's getting a lot closer now to being approved. And we're expecting approval of that over the next couple of months, which will be very good for Paraguay because it will allow the continual use and adoption of Bitcoin and also the Lightning Network, and also will allow some positive legislation around crypto mining, as well as exchanges, and it will just make it a much more crypto friendly country. And obviously, like we have been seeing in El Salvador and other South American countries who have a big interest in crypto at the moment, We are starting also to see an easing up of some of these lending platforms, which obviously struggled since the UST Luna debacle that we had, and many started to freeze withdrawals for customers. And there hasn't been, over the last couple of weeks, it seems to have slowed. I think the longer we go on, the less likely it is that this contagion will spread and will put a lid on it. And we did see some positive news from CoinFlex, who have started to allow withdrawals again, albeit with maximum amounts being able to withdraw per day, but it's a positive step. And hopefully we should start to see that a lot of the companies that were struggling, those with high leverage, or those who were struggling financially, should start to see some improvements. And I just wanted to go over a couple of on-chain Bitcoin metrics, as usual. So there's a lot of people been saying over this bear market, and for good reason, that Bitcoin is supposed to be a inflation hedge. And I guess the main thing to discuss with that is Bitcoin is quite a new monetary technology. It's only been around for what, 12 or 13 years. And we have seen some really explosive growth in Bitcoin. So we tend to see these kind of quite long bear markets where we get significant gains. Bull markets where we get significant gains, and then we see bear markets where we see big reductions in the overall crypto capitalization. And I guess the main thing about Bitcoin is, although it's not acting as a kind of store of value at this time, or an inflation hedge, what you do tend to see is Bitcoin tends to perform very well when the government is printing money. So it's kind of a hedge against Federal Reserve policy. As you will see there, if you look at the blue line in the left chart, you will see that Bitcoin has tended to peak when the global M2, so the money supply, has peaked. So if we see that in 2017, that is when we had the peak in the Bitcoin price, which went up to just below 20,000. And then if you then look at February 2021, we saw a peak that was kind of during the pandemic period, where the government was printing lots of money because they were providing stimulus to people who were struggling. We then saw another peak in the Bitcoin price kind of around May 2021. So there is a huge correlation between the amount of money that's been printed and then Bitcoin's success by market cap. So I think rather than saying Bitcoin is an inflation hedge, I prefer to say it's a hedge against the Fed being able to print money. And obviously over the last 6 months or so, we've experienced tightening and a reduction in the global M2 money supply. And obviously Bitcoin has reacted to that, as well as we've had increased interest rates. However, these Bitcoin cycles are cyclical. And it's very normal for us to experience these bear markets. I'm still very positive on Bitcoin and cryptocurrency in the long term. And I do expect that we will see a bounce off those lows and a relief rally. If we also look at Bitcoin over a 200-day trend, you will see that if we look at this chart here to the right, we will see that when Bitcoin, the Bitcoin price falls below this 200-day trend, we usually have quite a big bounce up. You'll see this 200-day trend as we went a little bit below that there. And then as we went below it again, we have constantly seen this kind of bounce up above the 200-day trend. And only 2% of the time in Bitcoin history has it been below that 200-day trend. And it's kind of around that point at the moment. So I still think we're in deep value territory. Obviously, the price isn't as low as it was at 18,000 during that low, but I still think over the long term, this is still a very deep value play. So thank you very much for listening to my video today. I really appreciate all your patience with the portfolio. As I mentioned, there won't be a video for a couple of weeks now, but I will try to write some written posts, and I will still manage the portfolio as usual. And also don't forget to join my Discord group and have awesome conversations with my really amazing community. And if you haven't checked it out yet, please also check out my eToro quarterly popular investors forum, which I did with last week, and you will see probably in my pin post. And we had some special guests on there last week, such as 𝗂𝗂𝗃𝗀𝗲𝗃, and we also had 𝘃𝗶𝗱𝗲𝗃, as well as some of our regular panelists, such as fund manager 𝘃cie 𝗹𝗹𝗀𝗃, Amar Singh, and our really great panel of guests. So check that out if you haven't already. It's a must watch. And until then, have a great week ahead.